Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar is fleeing, stock indices are licking their wounds, gold is setting records, and Bitcoin is falling out of favor. The escalation of the trade conflict between the US and China brought the American dollar back down. Beijing has tightened export controls on rare earth minerals, restricted imports of soybeans from the United States, and effectively banned its companies from doing business with the American division of South Korean shipping giant Hanwha Ocean. Donald Trump threatened to raise tariffs by 100% and to stop buying vegetable oil from China. The trade war increases the likelihood of a slowdown in the U.S. economy and forces the Fed to continue its cycle of monetary expansion. In the futures market, there's a growing chance that the Fed's funds rate will be cut by 50 basis points in October or December. Jerome Powell believes that sooner or later, unemployment will rise. Christopher Waller predicts a decline in employment and said the labor market is weak. The strengthening of its competitors is driving the fall of the U.S. dollar. The end of the political drama in France is supporting the euro. Growing demand for safe haven assets bolsters the yen, while the Bank of England's reluctance to cut rates is helping the pound. The White House's desire to extinguish the trade war fire, expectations of continued Fed rate cuts, and an excellent start to the corporate reporting season allowed S&P 500 bulls to lick their wounds. The profits of the six largest U.S. banks grew by 19% to $41 billion in the third quarter. BlackRock's assets under management exceeded $13 trillion for the first time, a new record. Lenders Management is optimistic about the prospects for the U.S. economy. Consumers continue to spend money despite the weak job market and uncertainty around the White House policy. Wall Street experts expect S&P 500 companies' profits to grow 8% in the third quarter. In fact, it could be plus 13%. History shows that in 3 out of 4 cases, actual results exceeded analysts' estimates. The belief that the same will happen now pushes the broad stock index higher. Moreover, FOMC's Stephen Moran argues that an aggressive Fed rate cut is needed against the U.S. economic slowdown due to the trade war. U.S. Treasury Secretary Scott Bessent hints that if export controls on rare earth minerals are relaxed, China's 90-day tariff delay could be extended. The White House's desire to de-escalate the conflict supports the S&P 500. Gold's rally to record highs above $4,200 per ounce resulted from a debasement trade. Governments cannot cope with budget deficits, are accumulating debt and demanding that central banks cut interest rates, as in the US, or keep them low, as in Japan. As a result, investors are losing confidence in government bonds and currencies. They are looking for alternatives and turning their attention to precious metals. Each time, gold finds a new driver of growth. In the summer, there were expectations of a resumption of the Fed's easing cycle. During September and so far in October, there were political crises in Japan and France, the US shutdown, and the renewed US-China trade war. In November, it will be the turn of the British budget and the court case over Donald Trump's tariffs. Against this background, Societe Generale's forecast of precious metal growth to $5,000 per ounce by the end of 2026 seems justified. The company is betting on a consistently high capital inflow into ETFs, a strong appetite for bullion among central banks, and a loosening of the Fed's monetary policy. The escalation of the US-China trade conflict caused Bitcoin to plummet. This process was catalyzed by low liquidity over the weekend and massive leverage. The crypto market took the brunt of Donald Trump's announcement of 100% tariffs against China, as the stock market was closed then. The massive leverage involved in trading digital assets turns trading into a get-rich-or-die game. The trade war proves that using Bitcoin as a safe haven asset is questionable. While gold rose due to the new tariffs, Bitcoin quotes fell sharply in April and October. The stabilization of U.S. stock indices after the sell-off is not helping cryptocurrency. While investors are playing Takeo and believing in Trump's put on the stock market, the old volatility rules now apply to digital assets. According to Macquarie, supply chain disruptions due to China's tightening of export controls on rare earth minerals could hurt not only artificial intelligence companies OpenAI and Anthropic, tech giants Microsoft, Alphabet, NVIDIA, and Oracle, but also crypto titans Tether and Coinbase. Investors will focus on the US-China trade war and the government shutdown in the week leading up to 24th October. According to Finance Minister Scott Bessent, the prolonged government shutdown could cost the United States $15 billion a day. Beijing has become significantly more assertive. It believes that, weighed down by cooling labor market, falling production, rising prices, and the shutdown, the U.S. economy will be unable to withstand a new trade war. Concerned about the fate of U.S. stock indices, Donald Trump will make concessions. At the same time, data released on third-quarter GDP, retail sales, industrial production, and investment will show how well the Chinese economy is doing. Investors will watch European business activity and inflation data in the UK, Canada, and Japan. U.S. statistics will continue to be delayed due to the U.S. government shutdown. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.